Although the epidemiological situation is rapidly deteriorating in China, oil has halted its slide today. There are even signs of rising oil prices, and this can be attributed solely to statements by the European Union on a new package of sanctions. The fifth package of sanctions against Moscow will reportedly include measures banning coal imports from Russia. However, it's not clear yet whether the European Union will implement a complete or partial ban. And this decision will be announced today after the Council of Europe approves the new restrictions. In any case, this will inevitably lead to a worsening energy crisis in the region. This, in turn, will result in higher prices, including prices for oil. The only question is how strong this growth will be. As noted earlier, it depends entirely on the nature of the new sanctions. Now let's take a look at the trading chart. During the pronounced downward move, Brent crude oil futures overcame the psychological level of $100 per barrel. However, they failed to fix below this mark. As a result, the market bounced back, but the bearish cycle remained in force according to the technical analysis. Thus, the benchmark will continue to slide after the price stays firm below the level of 100. Until then, Brent crude may see a rebound of range-bound trading. Meanwhile, gold has been standing still for 3 weeks now. The yellow metal is still trading within a tight range limited by the levels of $1,920 and $1,940 per troy ounce. So the fact that a few days ago gold had advanced slightly up and reaching the lower boundary of the range came as no surprise to market participants. Apparently, its growth will hardly be limited by $1,930 per ounce. Over the next few days, gold will most likely trade upwards, gradually heading for the upper boundary of the range. Uncertainty over sanctions on Russian coal supplies is also putting pressure on the ruble. After hitting pre-war levels, the Russian currency has begun to gradually lose momentum. Nevertheless, the pace of its current decline is very slow. This is due to the fact that there is no accurate information on the new restrictions. If Europe imposes a partial ban on Russian coal imports, the ruble's losses will be mild. If the European Union introduces a complete embargo, the Russian currency may well return to the mark of 80 rubles per dollar. At the same time, experts believe that the slide is inevitable as the asset is clearly overbought, thus at least a slight correction is needed. Technical analysis in this case is of a secondary importance, therefore it's not worth focusing on market indicators. As before, the main driving force behind the dollar-ruble pair is the news flow. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you!